Let's take a look at this final chapter of state and local government reporting. Chapter 9, Financial Reporting of State and Local Governments. After this chapter, we'll look at nonprofits and we'll go on to auditing as well. So, anytime we look at financial reports, we need to determine what the entity is that we report on. So, in our case of the government, we're dealing with a primary government. But besides the primary government, there are a whole bunch of other entities as well. There might be special districts, there might be commissions, boards, other agencies. There might be all kinds of other entities that are related to our primary government and maybe should all be included somehow in the financial reports that we're about to prepare. Sometimes those other entities might be special purpose governments. We mostly talked about general purpose governments so far, such as counties, cities. Those are entities that, simply said, have a lot of different funds and perform a lot of different functions. But special purpose governments, as their names say, they focus on a certain area. A special purpose government entity, for example, would be Wayne State College. It doesn't provide the usual activities such as taking care of roads and safety with police and all of that. They're just focused on one single purpose, special purpose government. All right, so the primary government might be a special purpose government or a general purpose government, but besides that primary government, there might be some related special districts, commissions, boards, other agencies, maybe special purpose governments that relate to this primary government. And how does that fit into a reporting entity? Well, here are the rules to consider. The government should report on all its financial reporting, should include all governments and organizations for which the elected officials are accountable. So accountable is the big word. I'm going to expand on that. So all of these entities together, the primary government and everything related, we're going to refer to them as component units, together form the financial reporting entity. So the financial reporting entity is the primary government and organizations for which the primary government is financially accountable. The key term, financially accountable. When you're financially accountable for the other separate legal entity, you need to include them in your financial reports. So primary government is financially accountable for another organization if the primary government appoints a voting majority of the organization's government board. So step one is, does this organization appoint a governing majority of this other board? If that's true, then you need to look at two other things. And A, is it able to impose its will on that other organization? Or B, is there a potential for the organization to provide specific financial benefits to, or impose specific financial burdens, the opposite of a benefit, on the primary government? Does the primary government get something out of this other entity? Yes or no? Or does that entity place a special burden on them? If that's true, there's financial accountability, and these entities must be reported as component units in the financial reporting entity. So in other words, the financial reporting entity consists of two pieces. At the very least, a primary government unit And if there are other entities involved, those other entities that need to be reported on would be reported or referred to as component units. The component unit is defined here, legally separate. Don't forget, they are legally separate from your primary government unit. But the elected officials of the primary government are financially accountable for that other unit, the component unit. So once you have component units, how do you record them, or how do you report them on the financial statements, I should say? There are two different methods: the blended presentation and a discrete presentation. On the government-wide statements, because that's all we're talking about, component units only show up on government-wide statements. Notice that down below. They are not on fund basis statements, component units. They're only on government-wide statements. So on government-wide statements, if you have component units, you can either present them discrete or blended. Discrete meaning they get a separate column. So they're reported separate from all the other data. A separate column, basically. You can look in your textbook and you'll see an example for the city and county of Denver. The blended presentation just mixes everything in to the two columns that you have. The primary government would have business type activities and governmental activities. So if the component unit's activities are governmental activities, that's where they would get blended in, totaled in to the numbers. If they're business type activities, they'll go into that column. So is the component unit part of the primary government? Yes or no? Is the governing body of the component units substantially the same as that of the primary unit, government unit? Is there a financial burden relationship between the two? Does the primary government have operational responsibility over this component unit? Does the component unit exist primarily to provide services to the primary government, or nearly exclusively for the benefit of the primary government? Is the component unit's debt expected to be paid entirely or almost entirely by the primary government unit? In that situation, you would have to use the blended method, because it looks like the component unit is really, though it's legally separate, it appears to just be part of the primary government unit, and you would blend the numbers in. Discrete presentation is used when? One, the component unit does not meet criteria for blending. That makes sense. If you can blend, then you must use discrete. All right. The obvious. Secondly, the component unit is a separate, legally separate, tax-exempt organization that meets both of the following. So we have a legally separate organization that meets both of these criteria. And that is, one, the assets received or held by the component unit are entirely or almost entirely for the direct benefit of the primary government or its component units. So, for example, we're talking about Wayne State College has a foundation. The Wayne State Foundation gives scholarships to Wayne State students and provides funds to Wayne State College, for example, to make improvements on campus. That's a legally separate entity, but a component unit of Wayne State College. The assets received or held by the component unit are entirely for the benefit of Wayne State College. So we're talking about discrete presentation. The primary government or its component units is entitled to or has the ability to otherwise access the majority of the assets. In other words, if they don't give the scholarships to Wayne State students, as Wayne State wants them to do, then they can appoint a different board and make them do it. In other words, both of these criteria, 1 and 2, have been met, And yes, we're dealing with a discrete presentation. And typically, universities such as the University of Nebraska do not like to disclose what they have in a foundation, just as a side note. All right, comprehensive annual financial report, you'll remember, we talked about before, prepared by most larger governments. It's the official annual report. It has the management discussion and analysis, just like a publicly traded company would. They have basic government-wide and fund financial statements. And there's the required supplementary information. Basic financial statements, supplementary information, and management's discussion and analysis are the key components. In addition, the CAFR includes some other things, some stuff that's interesting besides statistical sections and schedules. What is important to note, if it's audited financial statements, the audit report should be here. And there are individual fund and combining financial statements. So if you want to know how did all of these funds add up to this group of non-major funds here on the balance sheet, for example, of governmental funds, then there would be the combining financial statements that show all these individual funds and how they added up to that one non-major fund column. You'll recall that the sections of the CAFR are the following three: introductory section, the financial section, and the statistical section. Of course, the key thing to us is the financial section, and that's what we'll focus on. Introduction section is generally not covered by the auditor's report. It does have the letter of transmittal. That's a key thing to look at. Otherwise, the financial section would include, as I said, the auditor's report, management discussion and analysis, and the basic financial statements, meaning government-wide, fund basis, and the notes. Government-wide, you know there's only two, and fund basis, there may be 2 or 3, because there's a potential for a statement of cash flows. Preparing the financial statements, you make the adjusting entries, you have a pre-closing trial balance, you close the temporary accounts, there's nothing new to that, but reclassification entries, don't forget those. When you look at the net position, there are several categories under net position. So as you close the accounts, you may have to reallocate amounts between the net position accounts to make sure that they're individually correct as well as in total. The government-wide statements, statement of net position, statement of activities. The fund basis financial statements then, you have the governmental fund financial statements, meaning you have a balance sheet and a statement of revenues, expenditures, and changes in fund balances. It's expenditures, as you know, not expenses, because we're talking about governmental funds, and that's modified accrual. Of course, the fund balances must be classified according to constraints, so you have non-spendable, restricted, committed, assigned, and unassigned, as we talked about in an earlier chapter. Make sure you review this if you don't recall. Of course, when you have government-wide statements on one side and fund basis on the other side, one uses modified accrual and the other one uses full accrual, then you know there's going to be differences. And when you have those differences, we're going to have a reconciliation that shows how you can go from one to the other. Make sure you take a very close look at these reconciliations. These are probably the toughest part of this chapter. So take a look at them. It's all about